Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlett Fu.
All right, you mentioned Apple, so let's go there because that is our number one gainer, for me at least, on this Wednesday. Up about 5% here in the aftermarket. We are expecting around 4:30 p.m. Wall Street time, the president to make some announcement about another $100 billion investment on domestic manufacturing by Apple. Devil's in the details. We know Apple already spending about $500 billion investing in the U.S. over the next 4 years, but we'll see what we'll get. But Apple up 5% here in today's session. Arista Networks, ANET is the ticker, up 17% here at the close. Number one gainer in the S&P 500, reporting after the close yesterday, surging to an all-time high. This company's revenue forecast for the third quarter exceeding the average analyst estimate. A bunch of analysts raising their price targets on the stock. Bloomberg Intelligence Woo Jin Ho writing today that the company's reinforces its AI networking confidence. So some real outperformance there. And Shopify up about 22% here at the close. I believe it's the top gainer in the NASDAQ 100. The company becoming the most valuable in Canada. Citigroup called the earnings results a blowout, but I know we've got some earnings right now. Romaine, what do we got?
Let's get to Lyft. The share is spiking by about 7% in the after-hours trade. The company said that in the second quarter, revenue actually came in a little bit light, $1.6 billion. The street was looking for $1.61. And on the EPS side, also a miss there. EPS at 10 cents a share. The street was looking for 27 cents. But here is their guidance going forward. The company says that for the current quarter, the third quarter, it sees gross bookings of $4.65 to $4.8 billion and says that EBITDA should come in a range of $125 million to $145 million. I need some time to check the comparisons with analyst estimates, but you see the knee-jerk reaction in the shares right now is to the upside.
Yeah, expectations were not so high for Lyft today, particularly after Uber this morning, and I guess it's beaten those expectations.
Oh.
What's better? Let's go to
$6 billion buyback.
Let's go to Airbnb.
Not Lyft, by the way.
No.
Lyft has not approved a $6 billion buyback.
Let's go to Airbnb. And you're seeing, as Matt mentioned, that's the big headline, authorizing a new $6 billion share buyback program. That stock, though, right now initially down about 2% here in the aftermarket. Let's go to the forecast for the company. It still sees about a fiscal year adjusted EBITDA margin of at least 34.5%. We'll look for some comparison. As for the second quarter revenue, $3.10 billion, a little bit better than what the street was expecting, $3.03 billion. And then second quarter adjusted EBITDA of $1.04 billion. The estimate was below that at $970.7 million. And third quarter revenue, $4 billion, sees for third quarter revenue. So again, the outlook sees third quarter revenue, Matt, $4.02 billion to $4.10 billion. The street estimate is $4.05. But again, a new $6 billion share buyback stacks up. Now it's unchanged. So investors kind of bouncing around here in the aftermarket with.
Yeah, I mean, it's only an
2%.
It's only an $82 billion company. So that is an absolutely massive buyback for this company. That kind of just begs the question, do they have nothing else to do with the money, or they just have so much cash that they need to return some to shareholders? The stock has been flat on the year. Yeah,
and it's a good point, too, particularly at a time where we see so many companies taking that cash and reinvesting it back into the company, that big boost in CapEx spending amongst a lot of the tech companies. But I do just want to point out, this is a company that was also making a big bet on experiences, the idea that they want you to do more than just book a room. They actually want you to hang out, go backstage at concerts. They had a big partnership recently with Lollapalooza. And I was trying to look for a breakout of whether they had actually disclosed what they make specifically off that business. It's not really clear that they do that, but you did see an interesting bump up in gross bookings of about 11% to that $23.5 billion level, which was significantly higher than street estimates.
And today really is the day for gig economy companies. We're going to be waiting on DoorDash as well, and others. But if you look at Lyft shares, they have absolutely reversed now and are down more than 9%. So while, at first glance, some of these metrics beat, there was definitely some negative news in the Lyft earnings. It's not really reflecting well when it comes to, Uber and its Waymo partnership and so on Lyft.
Speaking of DoorDash, they're out with their earnings, a beat on the bottom line. EPS coming in at 65 cents a share. The street was looking for 45 cents a share. Revenue also beating $3.28 billion. The street was looking for 3.17. And here is your forecast, the guidance for the third quarter. The company sees marketplace gross value of $24.2 to $24.7 billion. That is above the average estimates of what the street was looking for. And it also sees adjusted EBITDA for the current quarter of $680 to $780. It's a pretty wide range, but we should point out that the average of analyst estimates is in the middle of that range at about $720. So a beat pretty much on both the top and bottom line for the quarter, and the guidance going forward also above street estimates.
All right, we just had a small cap, mid cap investor who likes Elf Beauty, and they are reporting their earnings, and we're seeing that stock. We'll bring it up in just a moment. Adjusted EPS, 89 cents a share, folks. That was about 6 cents better than what the street was expecting. Net sales, $353.7 million. That's pretty much in line with what the street was expecting. The estimate was $353.5 million. And then adjusted EBITDA, $87.1 million. That is above what the street was looking for, $74.3 million. We are seeing the stock, though, down about 1.4% here in the aftermarket.
All right, I've got Zillow here. So far, just out with revenue in the second quarter. Rentals revenue was in line with estimates at 159 million even, I should say, compared to an estimate of 159.7 million. Mortgages revenue was higher at 48 million compared to 44.5 million. That's interesting. And residential revenue was higher at 434 million compared to an estimate of 429 million. The chief executive officer, Jeremy Waxman, says the results reflect how the power of their strategy and the strength of their execution are fueling growth across the company. But will be interesting to see if they earn money.
Just a brief word on TKO, because we saw that $1.6 billion deal from ESPN and Disney, obviously, for the WWE rights. It beat as well on the bottom line and on the top line. The UFC revenue was a tiny bit light, but everything else, including WWE, beat.
Let's check in on Bumble, the dating app coming out with their earnings right now. It looks like a beat on the top and bottom line, with EBITDA coming in at right around $95 million, and paying users now at about 3.78 million, though we should point out that does appear to be a miss. The street on average was looking for paid users of 3.96 million, but revenue did come in above estimates at 248 million, higher than street estimates of 244, and the company also saying that it has found a new CFO. His name, Kevin Cook, the interim CFO, is going to step down from that role, as now we get a clearer picture of what the management looks like for Bumble going forward. A modest increase in the shares in the after-hours trade.
Yeah, Bumble up about 6%. Just a real quick line. I want to go back to Elf for a moment. The company is not providing a full-year fiscal 2026 financial outlook, and it cites potential outcomes related to tariffs. So we're starting to slowly get the impact when it comes to tariffs. Now I'm going to go to Duolingo, because, man, this stock initially just soaring in the aftermarket. Let's get to it. And in terms of the outlook, third quarter adjusted EBITDA, it sees 69.4 million to 73.1 million. And the estimate on the street, that was 70.5 million. Sees fiscal year revenue, 1.01 billion to 1.02. It had seen 987 million to 996 million. So it's upping up that number. Also sees third quarter bookings of 268.5 million to 272.5 million. That too seems like it is raising its expectations above what the street's expecting. Go back to the second quarter. EPS for the second quarter, 91 cents, easily beating the street estimate of 68 cents a share. And second quarter revenue, that too was a beat, 252.3 million versus the $240.6 million estimate. The stock is up, folks, 24% here in the aftermarket. Yeah,
absolutely. One of the biggest movers in the aftermarket. Another big mover is a company called Remitly. This is a wire transfer company that's primarily based online. The street was coming into this quarter expecting the company to post a loss. It actually posted net income of $6.5 million in the most recent quarter, revenue of about $412 million. That was also a beat. And for the full year, the company says look for $1.61 to $1.62 billion in total revenue, higher than its previous guidance, which was around $1.57 billion. Similar story when it comes to EBITDA, raising its guidance there as well. And I should point out, we're going to have the CEO of Remitly on the program a little bit later this hour.
Exactly. And we're also going to be having the CEO of Informatica, which also just reported now revenue was definitely a beat, $407.3 million. Adjusted EPS, though, a slight bit light, 18 cents versus the 20-cent estimate. We'll ask the CEO why.
I got Fortinet which is really a $75 billion internet security company, coming out with billings that were much higher than had been anticipated. The street was looking for $7.2 to $7.4 billion for the full year. Fortinet says there'll be $7.33 to almost $7.5 billion, and as a result, those shares jumped. They beat on second quarter EPS at 64 cents versus 59 cents. They have a higher adjusted EPS expectation than the street. They're saying, well, 62 cents to 64, and the street was only looking for 62, and a range looks the same in terms of revenue for the third quarter and full year, at least as good as or better than the street was looking for.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.